Welcome to the Deep Dive. Today we're doing something a little different, but I think with some really universal lessons on mastering complex information and, performing under pressure. We're cracking open a very specific, yet incredibly instructive document. The examiner's report from the Advanced Taxation UK or ATX UK, June 2025 exam. Now look, if you're an ATX UK student or professional, this is definitely for you. But even if UK tax isn't your thing, stick with us. We're going to distill what separates, successful learners from those who struggle, not just in tax, but really in any field where precise knowledge and applying it are absolutely key. This report, it's a direct line from the examining team themselves. They share their observations on how candidates performed and, crucially, offer constructive advice. It's kind of like getting a peek behind the curtain from the actual experts who set the bar.
And that's exactly what makes this so valuable. It's structured to give us a complete picture. It starts with the overall exam format, then moves into some general advice, really good stuff that applies to any candidate before diving deep into specific feedback. Feedback on the 3 compulsory questions from that exam, the big 50-mark Chloe question, then the 25-mark Cloak LTD scenario, and finally, ADL and SICTA, also 25 marks. So our mission today is really to offer you not just what to know from this, but how to think and perform at that high level when you're faced with complex info.
Exactly. Think of this as, a strategic shortcut. We're distilling the essence of high-performance learning from the insights of those who literally write the tests. Okay, let's unpack this then. Before we get into the weeds of the specific questions, the report lays out some crucial general advice. Things to maximize your chances. What are the sort of bedrock principles here?
Yeah, the examining team really hammers home 4 core pillars. They make all the difference. First, know your stuff. And they mean a high level of accurate knowledge of the UK tax system. And it's not just the new ATX material. It crucially includes foundational knowledge brought forward from the earlier paper, TX UK. We're talking precision here, not just a vague understanding.
Okay, precision. Got it. What's next?
Second, practice questions. This is, it's absolutely vital. You should be practicing past exam questions, obviously, but also pay really close attention to the style and presentation of model answers. And critically, learn how to spot the clues or triggers in a question scenario. Especially in those longer Section A questions, important guidance might be sort of buried in maybe a manager's email or something. It's about active reading.
Right, looking for those little signals.
Yeah.
Makes sense. And the third pillar?
Third, and this is where a lot of candidates apparently falter. Address the requirement. You have to read the requirement carefully, really carefully. Marks are only given for satisfying the specific tasks asked, not for other information, even if it's technically correct tax stuff. Pay super close attention to command words, calculate, explain, advise. They mean different things. Like calculate usually means figures are enough, maybe brief notes, but explain or advise. You need proper written explanation, maybe with supporting calcs.
Oh, and a crucial point, note what the question says not to cover. Including that just wastes time. 0 marks.
Okay, so answer the question asked, not the one you wish they'd asked.
Precisely. And the fourth pillar is kind of a 2-parter. Think before you start and manage your time. Allocate the right amount of time for each part based on the marks. And before you even start writing, take a moment. Think about the issues, identify all the points, plan your approach. Don't just launch into general explanations or long intros if they're not asked for. Apply your knowledge directly to the facts in the scenario.
And one last thing you mentioned. Yes, always. Show your workings. Method marks are available, even if your final answer is, slightly off. Don't just put a final number. Show how you got there. Spreadsheet, word processor, doesn't matter. Just show the steps.
So those are the fundamentals. But what about someone who's maybe struggling a bit, perhaps resitting? Does the report offer anything specific for them?
It absolutely does. For resitters, the advice is very targeted. Focus intensely on your weakest syllabus areas. And yes, that includes digging back into any shaky TX UK knowledge. Practice past questions, like we said, intensely, but also really work on improving time management. And crucially, aim to earn those professional skills marks. The report even points to specific non-technical articles on the ACCA website, especially for candidates hovering around the 40s mark. Little tips on how to improve.
Okay, professional skills marks, you mentioned them, and the report highlights them. What exactly are these, and why are they apparently so important?
They are crucial, really crucial. In question 1, for example, a full 10 marks were available for communication, analysis and evaluation, commercial acumen, and skepticism. Then questions 2 and 3 had 5 marks each, covering analysis and evaluation, commercial acumen, and skepticism. Communication skills, it's broad. Things like format, structure, clarity of your writing, using the software tools effectively, and just following instructions. Explanations need to be concise but still comprehensive, and information needs to be presented logically so it's easy to read. These marks, honestly, are often the difference between passing and failing. They test how you apply knowledge, not just what you know.
Right. It's about demonstrating that professional judgment. Okay, let's dive into the specifics then. Examples from the report. This is where we see these principles in action, isn't it? Where the aha moments happen.
Indeed. The detailed feedback on each question really highlights the common pitfalls. It's very revealing.
Let's kick off with Chloe. That big 50-mark question sounds like it covered a lot. What stood out there?
Well, the first part was about professional ethics, specifically objectivity and confidentiality relating to taking Chloe on as a client. And what happened was many candidates just wasted time discussing all the fundamental principles when only those two were asked for. But what's really fascinating, or maybe frustrating, is the question explicitly said, don't worry about confidentiality between Chloe and her partner, Terrell. They'd attend meetings together, get joint advice. But the vast majority of candidates apparently ignored this specific instruction and spent ages discussing Chloe-Tyrell confidentiality issues.
Wow. So they were given a really clear signal, a simplification even, and just missed it. Why do you think that happens?
I think, exam pressure plays a part. You see confidentiality and maybe default to the standard scenarios you've practiced without fully reading the specific constraints here. The real issue, which was kind of hidden away in Exhibit 1, was that Chloe was about to start working for JDV Ltd. And JDV Ltd was an existing client of the firm. That was the conflict. The question was testing objectivity and confidentiality between Chloe, the new client, and JDV Ltd, the existing one.
Ah, okay. So it requires reading everything and connecting the dots across different exhibits.
Exactly. Every detail is usually there for a reason. Ignoring one bit can send you down the wrong path entirely.
Okay, what about Chloe's tax residence? That always sounds like a potential minefield.
It can be. The requirement stated again very specifically that Chloe did not satisfy the automatic non-UK residence tests, or the automatic UK test, related to having her only home in the UK. But many candidates just jumped to assuming she didn't satisfy any automatic UK tests and launched into a long discussion of a sufficient ties test. But she did satisfy one automatic UK test, the one about working full-time in the UK for 365 days, where part of that period falls into the current tax year. So discussing sufficient ties was completely irrelevant, wasted time. Again, it's about reading the exact wording.
It's brutal, isn't it? The level of precision needed. Did anyone get that right, the residence point?
A small number did. They correctly considered the split year basis. Because Chloe became UK resident during the tax year but wasn't resident the year before, split year treatment applied. It meant she became UK resident from the date she actually started the full-time work, not right from the start of the tax year. Getting that nuance earned them an analysis and evaluation mark. It shows sometimes the toughest marks are for those specific, maybe less common rules.
Okay, moving on to chargeable gains. Often tricky. What were the lessons there?
Well, many candidates actually showed good knowledge of the temporarily non-UK resident rules. They correctly spotted that a portrait painting wasn't taxable because it was bought and sold while she was non-UK resident. That got commercial acumen marks. However, fewer could precisely define the conditions for those rules.
Okay.
Being UK resident for 4 out of the 7 tax years before leaving, and being non-resident for less than 5 full years. It shows the difference between knowing what a rule does and knowing the precise technical detail of when it applies.
Right, the exact parameters. Were there any sort of surprising errors in that section?
A big one, yeah. Loads of people calculated a capital gain on a vintage car, but all cars are exempt from capital gains tax. That's basic brought forward knowledge from TX UK.
Oh dear. That really underlines the need for solid foundations.
It does. On the flip side, most did well timing the sale of a landscape painting to maximize the after-tax amount. Good calculations, earned analysis, and evaluation marks. That part really showed the need to apply rules to the specific facts, not just list generic principles. Take the details, find the right rule.
And the employment contract part. Comparing benefits, that sounds very practical.
It was. The task was to calculate the financial cost of 2 alternatives: company cars versus an employer-provided unfurnished house. A good approach, the report suggested, was breaking it down. Calculate the taxable benefits for the cars, then for the house. Then do full income tax computations for each scenario, so salary plus cars versus salary plus accommodation. And then compare the overall net cost, including other things like maybe rent Chloe would save or car leasing costs she'd incur personally.
So not just isolating the tax on the benefit, but looking at the total financial picture for Chloe.
Exactly. And a really common mistake here was missing the restriction of the personal allowance. Because her income went over £100,000. This often happened if people just tried to tax the benefits at the margin, say at 40%, instead of doing the full income tax computation from scratch for each option.
And that personal allowance taper, that's TQK knowledge again, right?
Yep, brought forward knowledge. It just highlights that for these practical comparative questions, you really need to think strategically about the order of calculations to be efficient and, crucially, catch all those knock-on effects. You need that holistic view.
Okay, what about the company share option plan, the CSOP? Chloe had some ideas about that, apparently.
She did. She believed selling the shares wouldn't create a chargeable gain, which is incorrect. The report highlights that capital gains tax is definitely due when you sell CSOP shares. The gain is the proceeds minus the option price paid. The annual exempt amount would apply, sure, but any remaining gain would be taxed, probably at 20% for her as a higher rate taxpayer. There was actually a skepticism mark available for explaining why Chloe's assertion was wrong.
And did people get confused with other schemes?
Some did, yeah. They mixed up CSU with a share incentive plan, or SIP, which has completely different tax rules. Again, it just shows you need that in-depth, precise technical knowledge. A vague idea isn't good enough.
Okay, let's shift to Tyrell's business. VAT, value-added tax, always seems to catch people out.
It often does. The question asked why Tyrell wouldn't be compulsorily registered for VAT, but could register voluntarily. Most candidates knew the £90,000 rolling 12-month turnover threshold for compulsory registration. That was fine. But a commonly missed point was stating why voluntary registration is allowed. It's simply because he makes taxable supplies. You have to state that condition. People were generally okay on the pros and cons. Charging output VAT is a downside if your customers aren't VAT registered. But being able to recover input VAT is the big financial plus. Some also smartly noted that voluntary registration avoids potential penalties if you accidentally miss the compulsory deadline later. That got a commercial acumen mark.
Was there a subtle point about VAT recovery that got missed?
Yes, a really important one. Very few mentioned that Tyrell could also recover input tax on pre-registration purchases. Goods bought up to 4 years before registration, services up to 6 months before. The report specifically flags this V8 is often overlooked by candidates, but it will be tested. It's not a minor detail in practice.
Good warning. And what about allowable expenses for his new business?
Product design costs generally handled well. Allowable if incurred within 7 years before trading started, treated as incurred on day one. Business promotion travel costs allowed, but entertaining clients disallowed. Standard stuff. The gifts bit was interesting, like giving chef's knives to customers. The key detail often missed was the specific rules for gifts. Each gift has to cost £50 or less, it must carry a clear advert for the business, and it can't be food, drink, or tobacco. So for the knives, a skepticism mark was available for spotting that the scenario didn't tell us the cost of each knife. We couldn't know if they met the £50 limit.
So it's about knowing the precise conditions and spotting missing information.
Exactly. You can't just assume it's okay. You need to identify what information you still need.
Right. Let's shift gears. Question 2. Cloak Ltd. Corporate tax now. What were the big challenges here?
Okay, the first part asked for the increase in corporation tax from selling 2 assets, a warehouse and some shares. For the warehouse game, the figures needed to include the land value as well. A key point many got right was identifying a previous transfer within a 75% gains group. That meant the warehouse came in at nil gain loss, so for this disposal, Cloak Ltd. Had to use the original cost from before that transfer. But crucially, you needed to say gains group, not just group. The precision matters. Different group definitions exist for different taxes.
And structures and buildings allowances, SBA. How did that fit in?
Right, SBA. They're only available on the cost of the building, not the land cost. So that SBA claimed needed to be calculated and added back when working out the chargeable gain. Getting that interaction right earned both technical marks and commercial acumen marks. It's another example of how different bits of tax interact.
Okay, and the sale of shares in the other company, said Ltd.
The better prepared candidates knew this sale was likely exempt from corporation tax. Because of the substantial shareholding exemption, or SSE, technical marks were given for correctly stating and confirming the SSE conditions applied to Cloak Ltd's situation. It's a major relief, so knowing it inside out is key. But probably the biggest challenge overall for the corporation tax calculation was missing the impact of associated companies. Because Cloak Ltd owned more than 50% of another company for part of the year, it actually had 2 associated companies during the period. And that impacted the profit limits for corporation tax, pushing the company into paying tax at the main rate of 25%. Many missed this connection.
So seeing how one piece of information, the shareholding, affects a seemingly separate calculation of the tax rate.
Exactly. It's about seeing the bigger picture of the group structure and its consequences. Why did they tell you about that other company? It wasn't random information?
Makes sense. And the question also looked at overseas business setups, different structures, different tax impacts.
Yes, exactly. It compared setting up as a permanent establishment, a PE, versus a wholly owned subsidiary. If it was a PE of Cloak Ltd, its profits would just be included in Cloak's UK taxable profits. Candidates generally handled the double tax relief, the DTR, okay? But a common error in the DTR calculation was using the wrong UK tax rate. For the overseas PE profits, it should be the average UK corporation tax rate that Cloak Ltd pays overall, calculated before you factor in the DTR itself. The order matters.
Right, that average rate calculation is a specific step, and if it was a subsidiary instead.
Well, a new subsidiary would mean another associate company for Cloak Ltd back in the UK, which again impacts Cloak's corporation tax limits and rate. Many candidates apparently missed explaining that specific consequence. A critical first step, though, is deciding if the new sub would even be UK resident. Is it incorporated here? Or is it central management and control here? Only if it's not UK resident would its profits generally fall outside UK corporation tax. That residency point is fundamental.
So what are the wider implications, then, of it being an overseas subsidiary?
Well, if it's resident overseas, then Cloak Ltd couldn't claim UK capital allowances on the subsidiary's assets, and the sub wouldn't benefit from UK 75% group reliefs, like group loss relief with Cloak. Most candidates correctly said dividends coming up from the subsidiary to Cloak would probably be exempt from UK corporation tax. But fewer made the extra point that these exempt dividends also wouldn't count towards the augmented profits used to calculate Cloak's own corporation tax rate bands. This whole section really underlined the need to address all aspects of a requirement. Maybe using clear headings helps ensure you cover everything when comparing scenarios like this.
Good practical tip. Okay, finally, let's look at question 3, Adel and Sikta. This one focused on gifts, personal tax. What were the key lessons here?
This one, perhaps surprisingly, wasn't answered very well, according to the report, even though the technical tax content was relatively straightforward. It asked candidates to calculate which of 2 potential gifts would give the bigger net annual income tax saving for the couple. That last bit, for the couple, was key. What happened was, many candidates produced really long, detailed income tax computations for Adel and Sikta under both scenarios. But given it was only worth 5 marks, a much quicker marginal approach, just looking at the change in tax, would have been perfectly fine and much faster. This led to people running out of time and often missing the required explanations.
So the mark allocation itself was a massive clue about the expected depth and time, a signal to be efficient.
Absolutely. Marks are signals. Use them to gauge time and depth. And crucially, many candidates included calculations for things like national insurance or CGT or IHT, none of which were asked for in that part. And a really significant number focused only on the donor's tax saving. They completely missed the for the couple part, meaning they forgot to calculate the donee's extra tax liability, so they lost half the calculation marks right there.
Ouch.
Yeah. And a conclusion comparing the 2 options was also needed for a professional skills mark. This question just screamed, read the requirement carefully, precisely, and only answer what is asked. Ruthless focus is needed.
Okay, what about gift holdover relief for capital gains tax? That came up too.
It did. Most candidates knew one condition. The gifted shares have to be in an unquoted trading company. That was generally known. Fewer also knew the other key condition. The done, the person receiving the gift, must be UK resident. And quite a few confuse the conditions for gift holdover relief with the conditions for business asset disposal relief, things like needing 5% ownership or holding shares for 2 years. Those are different reliefs.
Right. You can't mix and match the rules. Precision again.
Exactly. Precise knowledge of each specific relief is essential.
And the impact of actually making that holdover claim.
This also needed you to think about both people involved, the donor and the donist. Most could calculate the initial gain. They recognized any gain not held over would be chargeable on the donor immediately. And they knew the held over gain reduces the donor's base cost for the future. That was okay. The harder marks, including a professional skills mark, came from realizing that the amount of gain eligible for holdover would be restricted if the company owned significant non-business assets.
That non-business asset point again. It cropped up in Cloak LTD too.
It did. It shows how certain technical points can appear in different contexts, and it reinforces that all the information in the question usually matters. There are rarely true red herrings. That detail about non-business assets was there for a reason.
Okay, lastly for this question, inheritance tax. Assuming Adel dies relatively soon after the gift.
Yes, and time pressure was really obvious here, the report says. Many candidates just missed relatively easy marks because they were rushing. For business property relief, BPR, it was similar to the gift holdover point. Many missed the potential restriction of BPR because of those non-business assets in the company. And when asked to explain the specific circumstances that would lead to the maximum IHT liability, many just listed general IHT facts instead of tailoring it. They needed to talk about things specific to this scenario, like Adol dying within 3 years of the gift, meaning no taper relief, the fact that Dunn planned to sell the shares soon, which could affect BPR, and the impact of any previous gifts Adol might have made. A strong, tailored conclusion could earn a professional skills mark here, too.
And was there a subtle skepticism point noted for this whole question? Like spotting missing info?
Yes, there was. The report highlights a skepticism mark related to that planned sale of shares by the Dunn. Even though she plans to sell, which could potentially withdraw BPR relating back to Adol's gift if he dies within 7 years, the question doesn't say whether she intends to reinvest the proceeds into another qualifying replacement asset. If she did reinvest, BPR might be preserved. That missing piece of information is vital. Candidates should always think about that replacement asset possibility when a Dunn sells a BPR qualifying asset before the donor dies.
That's a really subtle but important point. It's about thinking beyond the immediate facts given.
Exactly. It's that critical assessment questioning what isn't there that earns top marks. So wrapping up the overall messages, the examining team basically summarizes 4 key things that define successful ATX UK candidates. 1, they have sufficient precise knowledge of the tax rules, both ATX and the underlying TX stuff. 2, they can apply this knowledge effectively to the specific scenario they're given. 3, they carefully read and address each specific requirement in the question, no more, no less. And 4, critically, they take time to think and plan their answers properly, managing their time well across a whole exam.
Wow. This deep dive really shows that success in something complex like advanced tax isn't just about knowing stuff, is it? It's about precision, it's critical thinking, strategic planning, and maybe most importantly, truly understanding the question being asked.
Yeah.
Like you said, knowing why every piece of information might be relevant. So what does this all mean for you listening right now?
Yeah, this really raises an important question, doesn't it? How can you apply these principles, that meticulous reading, spotting hidden details, planning before you act, that commitment to precision? How can you apply that in your own work or your own learning, whatever field you're in? What information might you be overlooking right now because maybe you haven't fully stopped to consider why it's been given to you or what its implications are?
That's a great thought to ponder as you go about your day. We really hope this deep dive into the ATX UK Examiner's Report has given you some valuable insights. Not just into tax, maybe, but into the art of becoming truly well-informed and effective in any complex area. Thank you so much for joining us on this deep dive. Until next time.